Hello and welcome back to the Without the Bank podcast, where you and I are going to talk about all things IBC, the business of banking, how you can utilize your money correctly, and how that will help you grow your business and your wealth. Jeez, you would think it was the first time I said that. Okay, folks, today it seems to me that we need to talk about something I don't like to talk about. Something that probably is going to get this German passion all in an uproar, but we're going to talk about it. And that is the fact that life insurance is not an investment. Just say it with me. Life insurance is not an investment. Life insurance is not an investment. Life insurance is not an investment. I have gotten fairly active on the TikToks. And on those TikToks, I have lots of people screaming and ranting and raving about rates of return and how an investment is going to be better than a life insurance policy. And how the rates of return are not bad. And how if these were so awesome, what happened to the companies in the 80s and the 90s? How come they went out of business? Let's talk about it. Life insurance is not an investment. Never was intended to be an investment. Nelson talks about it in his book, Becoming Your Own Banker. Life insurance is not an investment. We are not doing this for a rate of return. It is not about a rate of return. If we go back to Nelson's book and we talk about the seen and the unseen, which is a chapter in his book, let's talk about the seen and the unseen. The unseen is what we get to do with our money while it's liquid. The fact that the life insurance policy is an and asset. Yes, it's an asset. And it's an and asset because we can put our money there and we get to use it to buy property, start a business, whatever it is we want to do with it. But it is not an investment. We do not put our money there in a whole life insurance policy and look at what our rate of return is in the future. We do not put our money there and go, oh my gosh, what are the ups and the downs? Because an investment is something that is in the stock market. When most people talk about a rate of return, that is what they are talking about. What is my investment doing for my IRA? What is my investment doing for my 401k? And it was interesting because I told this guy on the TikToks, I said, well, if you want to go buy a Roth IRA, go buy a Roth IRA. And he said, you don't buy an IRA, you invest in them. And I didn't think of it right away because I'm kind of slow. And I thought, well, then why are you arguing with me? Because you buy a life insurance policy, you don't invest in it. So quit calling it an investment. If you have read my book, if you have read Nelson's book, and you're sharing this with people, and they're like, oh, my investment will do better. It's not an investment. So why are you comparing it to an investment? That's like saying, oh, your orange tastes like an orange and not an apple. Why doesn't it taste like an apple? Because we're not comparing the same things. Then, this same know-it-all, who I'm sure has the arrival syndrome, there are so many things in the book for him to learn from. He says, well, you know what? If this was so awesome, why did these companies go broke in the 80s and the 90s? And I said, oh, you aren't talking about whole life insurance. You're talking about universal life, variable life, indexed life. So in the 80s, there was no variable and indexed. Maybe variable had just started, but mostly it was universal life. And they didn't price everything correctly. They invested it. It was the policy was saying, oh, I'm going to make so much in the market and it's going to get X amount of rate of return. And so they combined this rate of return and this investment inside the life insurance policy, kind of, sort of, okay? That is not, that's not whole life. The whole life companies, the mutual companies have been around 150 plus years. Now you're going to compare a 150-year-old company to a stock company that doesn't pay mutual funds, that hasn't been around for that long, that's trying out this new product to compete with the market. If you want to have an investment and you want a rate of return and you're chasing the rate of return, just go invest in an IRA. I'm glad he corrected my language there. I really am, because I had not thought of that. And he's right. He was right on that point. Hey, I'm willing to learn. So go invest in the market then. Nobody's making you buy life insurance. But it is really sad when you're talking about life insurance as an investment and then you're telling me it's a poor investment. I'd have to agree, because it's not an investment. We're not playing the market with it. But if you don't understand the product and you don't understand infinite banking, you are not going to understand the seen and the unseen. You are not going to understand liquidity control and guarantees. You are missing the whole entire point of what we're doing and what we're teaching. And I am sorry for you that you have the arrival syndrome. And many of you listening, thank God you don't have the arrival syndrome, or you wouldn't be here. I mean, we're so many podcasts in that, frankly, you would not be here. Unless it's your first one, then welcome. But this isn't about an investment. This isn't about a rate of return. You need to understand the concept, which is why I make you read the book, so that we're all on the same page, right? When it comes time to talking about this. But those of you listening, I am sorry that when you go tell your friends about this, this is what you are up against, and you're not armed with enough response to be able to defend yourself. I had a client that I talked to the other day, and she has a client who was telling her that whole life insurance is the worst thing she can do. And this lady worked for a financial advisor. And it's absolutely awful, yada, yada, yada. Well, why? Is she talking about whole life? My client has not paid attention enough to be versed in how to respond. So if we're going to do this, and if you're going to share it with people, you need to be armed with a little bit of information. And a lot of times, it's as simple as saying, you know what? Doesn't sound like you know what you're talking about. And so you might want to read the book. And they're going to say, no, I don't want to read the book. And then you know that you should just quit talking, because you're just beating your head against a dead wall. Well, every wall is dead. You're beating your head against a wall. Why can't I talk today? Oh my gosh. Remember, if you are the first one reading the book out of all the people you know, you already know more than what they know. And you are super excited and you want to share it. And I so appreciate that. And then you go out there and you share it and you get your head whacked and you get your head whacked and you get your head whacked. And pretty soon you're black and blue from head to toe. And you're like, you know what? I'm not doing that anymore. I'm just going to do it myself and people can figure it out on their own. It really is unfortunate. You know, it's amazing how we beat people up about what they do with our money, what they do with their money. But really the question is, are you making more than them? Are you advancing in life more than they are? If you are, then guess what? You're not in the right crowd. There's no sense in even talking about it because they're not paying attention anyway. That was a pretty minor soapbox I was on there today. Also know I did an earlier podcast on the difference between whole life, universal, variable, indexed. If you guys have not listened to that one or listened to it in a while, go back and listen to it. These podcasts are very good to really get you straight and thinking about infinite banking correctly. It is not about, oh, how much am I going to have for retirement? I had a client today that said that I inherited, I did not sell this to her. And she said, this was my retirement. I said, you can't save your way into retirement. You can save 40% of your income, and with inflation the way it is, that may not be enough for retirement. We need to figure out how to generate cash flow. And she was very open to that, which is fantastic. Now we just have to put some energy towards it and really look at what is it that we want to do and how much part do we want to play in that and all that good stuff. Because a lot of times we may not want to do any of that stuff and have the energy towards it. Well, if we don't have the energy towards it, then we're not going to have anything off the other side either. And so somebody telling you that, oh, we can get you some sort of rate of return that's going to get you where you need to be at retirement. Okay, so what are the downsides? What's the actual rate of return? All those good questions need to be asked, but this is not an investment. This is using life insurance so that we can maximize cash, and we've got some death benefit, but it's not an investment. We need to educate ourselves about infinite banking. Okay, if you have not gotten the book, Life Without the Bank, please go to Without the Bank and do that. Grab Nelson's book as well right away. And then, as always, if you need anything, just email me, MaryJo@WithoutTheBank. Check your emails. Once you buy the book, you will get a link to my calendar so that you can go ahead and schedule a meeting with me after you've read the book. And then we can have an hour-and-a-half consult. Talk about what is it you're doing? What does that look like? Can you start? Are we even a fit to work together if that is the case? If it doesn't work, it doesn't work. If we're not a fit, then I'll send you to somebody that you might be a fit with. I'm here to help, and not always can I help everybody right then and there, but we'll get it figured out. Okay? Until next time, you guys have a good week.